welcome to the explosive traffic pattern for trading options. Now, my background is basically in the hedge fund space. For about 20 years, I've been the senior strategy developer for some award-winning hedge funds and been blessed to be a part of some great teams. And I've also been a speaker at different various events, including some Bloomberg International events and others here, obviously domestically as well. So I love chart analysis, love developing indicators to forecast prices and quantitative models to trade them. Before we get started, let's just quickly touch on some common sense risk disclaimers. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. Also, hypothetical risk disclaimer, CFTC Rule 4.41 simply states hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. In this presentation, I'm going to show you one of two things. Real trade alerts that we published that did not have the benefit of hindsight. So we published these ahead of time, and I'll show you how those did, and then I'll show you a series of real trades as well. So that's what we're going to focus on today. Now let me take you back in time a little bit, because this is when the story started for us, and I'll just give you a quick background here. But back in 2017, we actually launched an option trade alert service that was designed to beat the markets through probabilities using a number of different strategies. So every week we would broadcast about 50 to 70 option trade picks. And as you can imagine, a lot of retail investors would say, hey, that's too many for my account. I'm gonna get to that part of it here in a minute. But this was the strategy. And so we were trying to beat the markets through probabilities. And then after our first 24 months of the service, we had really exciting results. So here's what they were. First, we had 1,027 trades that each made, these are all option trades, each made over 100% in profits. We had 365 trades that made over 200%. We had 2,383 winners. And if you added up all the winning trades and all the losing trades together, we were plus 84,994%. Now, it's important to understand that we had multiple exits. So we had profit targets and we had like an end of trade exit. So we would calculate these results using what I call optimal exit. And that means, like, if the profit target was up 200% and the end of trade exit was up 230, we would use the optimal exit, end of trade exit, in that particular example. So it's a way to be consistent in how we came up with our performance. This assumes 1% risk per trade. This is a equity curve. You can see that not every week was positive. We had a lot of really good weeks, and not every month necessarily was positive either. But overall, the results are very compelling. Now, that's the background. So we were very excited, obviously, with our first 24 months, but we had a really big problem. And that was that a lot of people came to us and said, there's no way I can trade 50 to 70 trades per week. And we understood that. So what we did is we said, and we had a lot of people come to us and say, can you just give me the best trades? And that's kind of a funny question when you think about it, because that's really, we all want to know what the best trades are, right? But at the same time, it was actually a pretty good question, because people were saying, look, I can't trade 30 or 50 to 70 trades a week, but give me the top three. Are you noticing similarities among many of your biggest winning trades? And so it forced us to go and dig through our results. And the real breakthrough came when we noticed similarities among many of our biggest winning trades. So it was a great exercise, and we're glad we did this. We're glad people spoke up. And what we found was, when three market conditions appeared, the stock would often experience a big price move. The three market conditions were like hidden clues that the stock was about to take off or drop like a rock. For example, in late 2017, and by the way, I'll show you recent examples. I'll show you the live trades on the board right now for this exact same pattern, and I'll show you the track record for the last 10 months or so. But so this is going back again with our original study. In late 2017, when the SPDR DIA ETF experienced the three bullish conditions, it ended up taking off like a rock. So to show you on a chart, each condition's like a light. So when the condition would turn bullish, then the light would turn green. So you can see the three green lights on the chart here. That means that all three of these individual conditions are flashing bullish. And so that when that happened, we actually recommended buying the DIA 235 calls. Those jumped in value by 338%. What does that mean? So a lot of people will think in their minds, well, what does that mean in terms of dollar and cents? So I've included a kind of a small account, big account example for you here. So if you would have bought $200, for example, of these DIA 235 calls, that would have grown in value to $876. Excuse me, or if you would have bought $1,000 of these calls, that would have grown to 4,330 or 80, excuse me. So that's what that growth means. So up 338% would translate to these different dollars and cents figures. So I'm going to include both of those just for reference, so you can visualize in your mind what that means. What does the performance mean? Then in March of 2018, when Wells Fargo experienced the 3 bearish market conditions, WFC dropped like a rock. Now, visualize in your mind that these conditions can be bullish or they can be bearish. When they're bearish, then it turns the light red. So when all 3 conditions turn bearish, we get the 3 red lights all happening at the same time. We recommended buying the WFC 56 puts. Those were up 515%. So just keep in mind, if you're new to trading options, when you buy put options, that gives you the ability to profit when prices fall, when the stock prices drop. When you're betting that the prices will go higher, then you want to buy a call option. So put options are what you use when you want to profit from falling prices. We had these 3 red conditions here, all flashing at the same time, and the WFC 56 puts that we recommended jumped in value by 515%. So $250 grows to $1,540, or $1,000 grows to $6,150. The 3 market conditions were like 3 distinct patterns, which we developed into the 3 lights pattern, or the traffic pattern. Now, when the 3 market conditions triggered at the same time, the stock would often experience a big price move, like when JP Morgan experienced a bullish traffic pattern. Here's what it looks like in the charts. We get the 3 green lights, and each one, again, is an individual condition. I'm going to show you exactly what these are, so there's no mystery here. I'm here in a minute. So when they all fire at the same time, when they all say bullish, they turn green, and we recommended buying the JPM 98.5 calls. Those jumped in value by 568%. So $200 grows to $1,336, or $1,000 grows to $6,680. Or when Citigroup experienced a bearish traffic pattern, you can see here the 3 red lights. So these are the same conditions now, but now they're saying bearish. They're saying they're flashing bearish, they're triggering. And when they all do it at the same time, that gives us 3 red lights. In this case, we recommended buying the Citi 73.5 puts. Those jumped in value by 400%. So again, 250 grows to 1250. That's a small account example, or $1,000 would grow to 5,000, the bigger account example. Now, or when UPS experienced a bearish traffic pattern, we had all 3 red lights again. So this is the 3 conditions flashing bearish. We recommended buying the UPS 111 puts, and those were up 413%. So $250 worth of these UPS 111 puts would grow to $1,282, or $1,000 would grow to $5,130. When the traffic pattern appeared, stocks often had big moves and options jumped in value, because options can make big profits when stocks experience big price moves. Now, I'm going to give you a background here, but there's more than one thing happening here. There's a directional play, but there's also what I'll call kind of an explosive play. So it's 2 things happening. It's forecasting a potential up or down move, and it's how the move unfolds, which makes us potentially even more money trading options. When I say trading options, I mean buying options. So buying call and put options is the perfect way to cash in when stocks are likely to make a big move. In fact, they're really a great way to trade these patterns. So we named this new pattern, or the strategy, the traffic pattern option strategy, or the 3 light strategy. Trading system flashes green or red to signal when stocks should go up or down. So it's almost like a traffic pattern now we're seeing, but it's tracking 3 individual conditions. When they all track green or light up green, that's a bullish example. When they all light up red, that's a bearish example. Now, the traffic pattern not only forecasts direction, but also predicts when a big price move is likely to happen. And this is very meaningful for options, because that's when options can really jump in value. And that's where we can make some really explosive returns trading options. And big price moves are what make options really explode in value. The power of multiple price patterns. Now, I'm going to step back in time here. This is early in my career. This is a story you can't make up, very entertaining story, but this is how I kind of first came across the idea of tracking multiple patterns firing off at the same time, like multiple different patterns, all saying bullish or all saying bearish, and how I learned about this strategy. I call this story "What I Learned from a Genius Convicted Felon." You can't make this stuff up, true story. And this was told to me by my father's friend. So senior to me by 30 years, or 30 to 40 years up. But he told me a story many years ago, and it's stuck with me over the years. But he loves trading, and I love trading in college. And so back when I was in college, he shared this with me, and it's really been, you know, something that stuck with me over the years. So to tell this story back, and he's telling me this back in the early 1980s, this good friend of my father, who became a good friend of mine because we both like trading, he responded to an intriguing ad about a highly secret trading strategy. Now remember, this is pre-internet, so the way you learned about trading a lot of times was reading, you know, trading magazines. And so in the back of the trading magazines, there would be different advertisements talking about different things. So this advertisement was advertising a highly secret, very special trading strategy. And so, intrigued by the ad, my friend convinced his top client to spend $25,000 to buy this secret strategy. Now, to me, this is the crazy part of the story. I mean, think about that. Sight unseen, you see an ad in the back of a magazine advertising a really special trading strategy, and he paid, you know, his customer, best client, paid $25,000 for this strategy, sight unseen. I think that's crazy, but they did it, and that's where the story begins. So they sent this guy the money, and then they decided to go. They had to go pick up the strategy. Now it's not, you can't email it in a file. It's a pre-email, right? Pre-internet. So they traveled to Dallas, Texas to meet the creator of this special trading strategy. And this is where the story gets strange. And so they arrive in Dallas, they rent a car, they go to this address. Again, they don't know anything about the guy or the address or anything. And they pull up, and it's a very middle-class looking neighborhood. That's the first thing. There was a little bit of a red flag, if you will, about what's happening here. They've already paid the $25,000, but it seems like they should have been pulling up to a really nice neighborhood. If this is, you know, this strategy is that special, why isn't this guy living in the, you know, the nice part of town, if you will? But it was a very normal middle-class neighborhood. So they got out of the car, went to the door, knocked on the door, and this mad scientist kind of unkept guy answers the door. The first thing he says is, "Can you meet me around in the garage?" So he didn't even invite him in after spending $25,000. So I'm hearing this story. My friend's telling me this story, and so him and his best client, they walk around outside. The garage door opens. This guy walks in the garage. First thing he says is, "I just got out of prison." So you can imagine, my friend's just thinking, "Oh, this couldn't get any worse. This is crazy. And what have I gotten my best client into?" So in this particular case, he starts to go on, though. This is where it gets interesting. So this man was not a violent felon. He was actually a genius scientist, and he was put in prison because he helped the Hunt brothers build listening devices to help corner the silver market. So he was in there for helping the Hunt brothers, you know, corner the silver market. He was doing, I guess, building this eavesdropping device in the late 70s, and that's what got him prison time. So while he was in prison, this very bright man decided not to waste his time, and he decided to focus his time and energy on studying price charts. So he studied the charting grades, including Fibonacci, Gann, Elliott, and anything he can get his hands on. And what he discovered during his slow days in prison was really remarkable. This highly intelligent man observed that certain chart patterns have predictive value. So what does that mean? I mean, we kind of know that today. Like a Head and Shoulders would be predicting that prices could go down. But that's what, you know, that's something that's more common knowledge today than it was back then. But he discovered something beyond that. What was really intriguing was that combining multiple chart patterns often would produce superior results. So not only if you combine several different conditions or patterns, if you will, that all were in agreement, then it would not only possibly improve your probabilities of being right, but also I thought the even more interesting part of that was it had the potential to increase the explosiveness of the trade. So instead of just saying this stock is likely to go up or down, it's saying this stock is likely to go up and up in grand fashion, you know, maybe potentially have that explosive trade to the upside or downside. Now, this is where it gets really exciting as option traders, because if we're right in direction, we can make some money. But if we're right in direction and it's explosive, then it gives us even that higher potential out there. So the accuracy of these multi-pattern predictions, these incredible forecasts, increased dramatically, and that was exciting that they could be very explosive. Now today, the traffic pattern follows these same principles that this man, this genius, convicted felon uncovered in prison. With our strategy, we're leveraging multiple conditions that signal when a stock is likely to drop or take off like a rocket. For example, when 3 bullish conditions lined up for Ford, the stock ended up taking off to the upside. So here's the 3 green lights, and these are each individual conditions. Again, I'm going to tell you exactly what these are, so there's no mystery here. You can track these yourself. And when they all lined up, then we recommended buying the Ford 12 calls. Those jumped in value by 177%. So $100 invested in these calls would grow to $277, or $1,000 invested in these calls would grow to $2,770. When the 3 bearish conditions line up for SPY, which is the S&P 500 ETF, the ETF sold off hard. So here's the 3 red lights now, which is telling us that each condition is now bearish. We recommended buying the SPY 274 puts. Those jumped in value by 488%. So $250 worth of these puts jumps to $1,470, or $1,000 worth of these puts jumps to $5,880. And when 3 bearish traffic conditions lined up for 3M, the stock ended up dropping like a rock. So here's the 3 lights again, flashing bearish. They're all lining up. They're all triggering at the same time. Then we recommended buying the 3M 237.5 puts. Those jumped in value by 532%, which is obviously a pretty big move for options. So $250 would grow to $1,580, or $1,000 would turn into $6,320. Now, a lot of you are saying, okay, that's very interesting, but what are the individual patterns? So I'm going to hold nothing back here. I'm going to show you exactly what they are, reveal our hidden research, if you will. And so you can actually track these yourself if you want to. So the 3 patterns that we observed before many of our winning trades work together to make up what we call the traffic pattern. Now, number 1, I call this surging momentum. That's condition number 1. That's kind of our foundational condition. We're looking for stocks that have a significant increase in upside or downside momentum. So upside would be the green bullish condition. Downside would be the red bearish condition. Surging momentum must be present if a stock in a stock as the first condition for the traffic pattern strategy. Now, our breakthrough came when we discovered what we call predictive momentum patterns. We discovered through empirical research that initial momentum surges were very difficult to predict. The accuracy was only approximately 15 to 20% of the time. Therefore, we don't try to predict initial momentum surges because it's just not a very high probability. We then discovered what we call continuation momentum surges, and these can be predicted with much greater accuracy, upwards of 70+%, so much more predictable. Therefore, the traffic pattern ignores initial momentum and only focuses on what we'll call continuation momentum. So here's what that looks like in a chart. So if you see the chart here of the stock, you'll notice that the momentum indicator is down here at the bottom. So let me go ahead and circle this. I'm circling it down here at the bottom. It's a price chart of a stock at the top. So if you'll notice here, there's green bars, and there's a little bit of a look and feel of you can kind of see a hidden cycle in there too with the momentum action. But what we're looking for is, first and foremost, with the traffic pattern strategy, is this initial surge. So once we see that, we're not trying to predict that, but we want to see that as a kind of a first precondition, if you will. And then you'll notice that there's a little bit of a downswing here, and then where the green arrow is, there's a follow-on or continuation momentum surge. So that's what we're looking for as part of this strategy, and that's the condition that lights up the top green light. So this is bullish, this is green, in the upside direction, and when we see this happening, that meets condition number 1, and that turns the first green light on. So that's what we'll call surging continuation momentum. So condition number 1. Now, condition number 2 is simply a cycle swing. We then look for a well-defined cycle swing in the direction of surging momentum. We found that surging momentum oftentimes supercharges cycle swings. The cycle swings define the price action that the traffic pattern trades. The cycle swing must be present as the second condition of the traffic pattern strategy. So you'll see here in the bottom this time, now I've got a very simple cycle indicator. You can visually see the upswings and the downswings here. So where the green arrows are, that's the cycle upswing that we're looking for. That's unfolding at the exact same time. We're getting what we call continuation surging momentum. And so when we see this upswing happening, unfolding, this actually lights up our second green light. So that tells us, this really defines the period of time that we're trading in the markets. So when you see that, when you see the upswing happening, our goal is to get into the call option because calls are used to profit from rising prices. We're getting in the calls as close to the beginning of the upswing as we can, and we're exiting as close to the end or the peak, if you will, after the swings run its course. So this defines not only a condition, but really defines the life cycle of the trade. So we want to be part of this trade during the upswing. We don't want to get in early during the previous downswing. We don't want to overstay our welcome during the following downswing, but just participate in the trade in this condition number 2 during the upswing. Now, condition number 3 is what we call peaks and troughs trigger. The third condition is really more of a trigger, which enables us to get into swings when they start. The trigger is designed to detect the beginning of a swing at the beginning or at the cycle low or cycle high. So cycle low would be for bullish, cycle high would be for bearish. So in the bullish condition here, this is our troughs trigger. Again, we're using like a custom in-house indicator here that's designed to tip us off when a upswing is likely to unfold or downswing. So in this case, it triggers right at the previous cycle low, and this is telling us that there's a pretty good chance that the upswing is about to start. So this gives us a heads up that this whole trade is about to get underway. So we get the green light here. We have a number of these, we'll call it troughs and trigger indicators that we've used. We've actually developed a few more that are very effective as well. And so this right here would light up the bottom or the final green light. So this gives us the third condition, if you will, of the traffic pattern trade. So when all three of these conditions line up, then we get the traffic pattern trading pattern or signal. So here's what they all look like together. Number 1, we have the initial momentum, and then we have continuation surging momentum. So turn on the first green light. Then you can see behind the traffic light here for number 2, the upcycle, the upswing. So that's part of the cycle upswing. And then that turns on obviously the center green light, and then the bottom trigger up here where the blue arrow is, that actually will turn on the last or the final condition, bullish condition, or the final green light. So when all three of these are flashing green, this is where we recommend buying a call option. This is part of what we'll call the bullish traffic pattern trade when all three bullish conditions line up. Then we look to buy call options. Now, as I've mentioned before, traffic patterns can also be bearish. So bearish traffic patterns forecast when a stock is likely to drop like a rock. For bearish traffic patterns, we first look for negative downside surging momentum. Now, here's a chart of what that looks like. Now, you'll see this really, my momentum indicators here at the bottom, this really big down red surging momentum right there. That's initial momentum. We don't try to trade that. That's too hard to predict. What we do over on the right-hand side is you'll see the initial momentum was down, and then you've got the continuation momentum. So I'll kind of circle that here on the chart. That's what we're trying to predict. And the reason why is because our research tells us this is much more predictable, and that's what we want. So we're looking for follow-on continuation, in this case, downside surging momentum, and this is red with the momentum indicator. And when we see this, this actually lights up our bearish condition number 1 with a red light this time. So we're now forecasting that prices should drop. Second, we look for a negative cycle swing. And in this case, we are looking for a down cycle. So when that's, again, to see the cycle indicator, sometimes it's a little bit more clear than other times, but you see the downswing here, that lights up the second condition to the downside. With a downswing, it's now bearish. This defines the life cycle of our trade. So we'd like to get into our put as close to the cycle peak, and then get out of it as close to the follow-on cycle low. So that's what we'd like to do as traders. This lights up, again, our second condition, second red light. The final condition, we look for a top trigger. So now we're looking for this trigger, this custom trigger indicator to tell us when the down move is likely to start. So now we're looking for the downswing, the down cycle, down continuation surging momentum. When we have the top trigger, this lights up the final red light. So this is condition number 3. When all 3 triggers line up, we get the bearish traffic pattern. So here's what they look like on a chart. And you can see here, first one, continuation momentum, lights up the first red light because why? It's to the downside. This negative momentum and this forecasting a bearish price move. Second one, down cycle, down swing. We're looking at a cycle indicator for this, lights up the second green or red light, excuse me. First one's a red light, second one's a red light. Now the third one is a top trigger. That lights up our final red light. So 3 red lights, red for bearish. When they all 3 trigger, this tells us that there's a confirmed bearish traffic pattern. And with this pattern, we're looking to buy put options because put options allow us to profit from falling prices. Now, when traffic pattern signals occur, they seek to forecast not only direction, but also a potential big move out there. Like our genius convicted felon friend story I told you a second ago, he researched and found that when you have multiple conditions, not only could it improve your probabilities in the direction, but I think almost more importantly, it also had that explosive factor where it could be an even more explosive move in that direction. For example, when Capital One Financial had all 3 bullish conditions, we had all 3 green lights trigger, a bullish traffic pattern was signaled. So here's what it looks like in a chart. And this is kind of what I consider to be a textbook one. Beautiful upside surging momentum. Then we have continuation momentum there. We have the top green light because we've got bullish green momentum. That turns on. Second one, up cycle, check the second box condition. That's the second green light that turns on. Finally, we have the Troughs trigger where the blue arrow is. That's the third green light. All 3 of these, when they light up, we recommend, this is a real trade alert, by the way, we recommend buying the Capital One Financial, 87.5 calls, and those are up in value by 480%. So this is a case where we have basically a situation where we're recommending buying the calls, and the people who bought the calls obviously are making money in this case. So $100 in this example would grow to $580, and then $1,000 in this example will grow to $5,800. So, all right, so in this case, IBM, here's another case. IBM had all 3 bullish conditions. A bullish traffic pattern signal was confirmed, and IBM options increased in value. So this is the 152.5 calls. This is all 3 green bullish conditions. Now, this is a case where it kind of fizzles out a little bit. I want to include this. The momentum on the follow-on condition was just kind of flat, but it was still up. And we have the upswing and we have the Troughs trigger. So all 3 of these green conditions were met. It's an official traffic pattern trade, but it doesn't have the explosiveness as some of the other trades. So this is a real trade alert. We recommended the 152.5 calls. Those were jumping in value or jumped in value by 111%. Now, here's the interesting part of this. We missed a traffic pattern right after that. So look what happened next. So we have continuation surging momentum again. We have an upswing again, and we have the trough trigger again. So this one that we missed would have likely been much more explosive to the upside and made a lot more money than, or a return than 111%. So we actually missed that one, but sometimes it can happen one after the other like that on charts. We just happen to miss that one. And when Norfolk Southern had all 3 bullish conditions, we knew it was likely to take off in the upside direction. So in this case, all 3 green lights, all 3 conditions flashed. This is a textbook one. We recommended buying the NSC 130 calls. Those jumped in value by 572%. So obviously this is one where it really works out. You get the explosive move to the upside. And so $250 grows to $1,680 or $1,000 grows to $6,720. The traffic patterns can also forecast, as I said, and we know when stocks drop like a rock. So in this case, we have Aetna. So when Aetna had all 3 bearish conditions confirmed, we knew it was likely to sell off. Now, this is one too that has the continuation downside momentum, downswing, and the peaks trigger. So all 3 bearish conditions are there. We recommend to our followers buying the 175 puts. This is a real trade alert, by the way, that was up 202%. So $250 grows to $755 or $1,000 grows to $3,020. And when Tata Motors had all 3 bearish conditions, we were confident it was about to sell off hard. Now, this is one that kind of fizzles. So all 3 of the bearish conditions, yes, they were here, but you can see here, Tata Motors just had a very nominal sell-off here. So not all of these winning trades are going to be out of the park home runs. Some of them are very modest gains, and that's obviously part of trading. But all three red conditions were here, but you can see even the down cycle. Look at how anemic that is. Just a very, very subtle downswing. And we recommended buying the TTM 26.5 puts, and they were up by 120%. We're not going to complain about that, but not all of them are going to be really, really explosive. 250 turns to 550, and $1,000 turns to 2,200. Then Norfolk Southern had all three bearish conditions confirmed, so we forecasted that it would drop in value. So here's another one. Now, here's an example where the timing was off. So we have the three bearish conditions trigger, but Norfolk Southern just chopped around for a day, actually went against us a little bit, and then finally went down. So the NSC 130 puts that we recommended, yes, they were up by 115%, but because the timing was off, they were I think it was a less of a gain than it could have been. So 250 grows to 537, $1,000 grows to $2,150. Now, traffic pattern essentials. Here's some key points here. If big moves in stocks can make big money trading options, and if our risk is always limited to the price we paid for the option, then it's possible that traffic patterns may be one of the best ways to swing trade. I think it is. It's a great way to swing trade the markets. It's almost like supercharged swings that we're looking for in the markets. In fact, this breakthrough strategy could be one of the best ways to trade or buy options that I've ever seen. And it's a big statement here, but the reason why I say that is very simple. So think about this for a minute. I call this the right-wrong index example. So think about a case where we buy a call option, right? And let's say we're wrong and the stock goes down, right? There's different degrees of being wrong. I'm going to show you a trade here in a second, a real trade I put on where I risked $1,000 and I couldn't have been more wrong. So I bought a call option for Oracle and it was the biggest down week in history. I mean, think about that. I couldn't have been more wrong on that trade. And I only lost the amount I paid for the option. So our losses are limited here when we buy options. So that's the good news. So on the right-wrong index, when you're really, really wrong about most things in life, it can end up being, really bad. But in this case, let's talk about being right. The more you're right, let's say I'm really, really right with a trade, we have a lot more upside potential. So let's say we can only lose the amount we pay for the option. If it's $100 or whatever, $1,000, that's the maximum risk of loss we have. But if we're really, really right, we can make, 300%, 500%, or whatever. So that's what I love about the strategy. And the other thing is the strategy is designed to be in sync with cycles. That's so important when you're buying options, to be in sync with the cycle. And the best part of this traffic pattern is it's super simple to trade. Now, what really convinced me and my team, I've got a couple guys who do research with me for the hedge fund side of things, the power of the traffic pattern was a series of real option trades. Ironically, the worst trade in this group was not a traffic pattern signal, but all the best trades were traffic pattern trading signals. So here's a table of all these trades that I placed, and the results were, this is from a very good week of trading, and most of the winners, I think almost every single one of the winners was traffic pattern strategy. And so this really hit me like a ton of bricks. Now, the first thing I'll say here, this is an unusually good week. This is not normal at all, but you can see rainmaker weeks like this one. And when I saw this week, I'm like, wow, these traffic signals are really worth watching and trapping because I do a lot of different research. So I'm always looking at a lot of different strategies. And this is really where I came to really love and appreciate the traffic pattern. Now, let me talk about the losing trade first. So this was not, funny enough, this was actually not a traffic pattern trading signal. It was with Oracle. And every one of these trades was risking approximately $1,000. And so this was a trade where Oracle had the biggest down move in history. I bought on this trade, I bought the Oracle 52.5 calls. So I lost on this trade $1,000, and that's good news. You may say, how is losing $1,000 good news? Let me tell you why. Because I couldn't lose more. And really, if you think about how wrong I was in that trade, I could have been punished far worse. It was the biggest down week ever in Oracle, and I was on the wrong side of that. So I lost $1,000 on that trade. Now let's get to the good news here. So on all the traffic trades, those trades were incredibly profitable. So the first traffic trade by itself was risking $1,000 on buying the UVXY15 calls. That made $3,000 of profits on that trade alone. So that pays for the $1,000 loss over here and puts me in that plus column by $2,000 on that single trade. So it's the upside downside risk potential we have when we buy options. So UVXY up $3,000. That was a traffic pattern. UPS, this was buying the 110 puts. This trade made $3,852 in profits. UNH, this was a traffic pattern buying the 225 puts, made $4,555. AT&T, another traffic pattern buying the 37 puts, made $1,885. SPY, another traffic pattern. This was buying the 273 puts. This made $4,592. SDS, don't ever trade those options. Those are terrible. I was right about this, and we should have made over $1,000 in this trade, but I ended up making 84 bucks because it was so bad with the liquidity. The bid-ask spread were so wide, I got killed on the entry next to the trade. So should have known better. I should have known better, but I'll never trade SDS options again. PG, Procter and Gamble, this was buying 79 puts, made 3,024. Navistar buying the 35 puts, made 1,240. MasterCard buying the 182.5 puts, made 2,960. You get the idea. J&J made 2,700. Home Depot made 2,250. Goldman Sachs made 4,440. All these are real trades, risking approximately $1,000 per trade. And there's a lot more than that. There's Apple. Apple trade made $3,588. There's Aetna, that trade made $540. There's BBY, DIA, a bunch of other winning trades as well. You get the idea. Now, this is a very unusual week. Understand that. Very, very unusual, but it can happen over time. A mere $2,000 of risk, more than I risked on each one of these trades, would have resulted in a $90,000 up week. So very, very profitable week. After this week of trading real money, my team and I really began to understand the power of the traffic pattern strategy. Now, notice there was a 99% losing trade. That was Oracle. That was another strategy. This was not a traffic trade, but it really drives home one of our points. This was another trading strategy. Let's keep it real here. It's important to understand that there will be losing traffic pattern trades as well. So, and again, the worst losing trade you can have a traffic pattern is 100%. What does that mean? Like if you risk $100, the worst case scenario for you is that you lose 100% of that, which is $100. If you lose 20% of the trade, you lost $20. If you risk $1,000 and you lose 20%, you've lost $200. But our losing risk is always capped to the price of the option. But the upside is obviously much greater. Now, there's no trading strategy in the world that wins all the time. Just understand that profitable trading is about making more money on your winners than you lose from your losers. All right. So just understand that there are traffic pattern trades that will result in losing trades. And that's okay when you're seeing big winners like plus 196 or plus 434. That's what our strategy is. Limit the losers and go for or target the big winning trades. All right, let's go ahead and touch on how do I get traffic pattern signals. So if you're a trader and you say, I want to trade this traffic pattern, I want to find these trades for myself. There's two ways you can do this. If you're a do-it-yourselfer like me, you could monitor a list of about 150 optionable stocks every day to track for these three conditions. You can do this. I've done it. I'm a guy who loves to sit in front of my charts all day. And I'm a huge nerd. I mean, everybody who knows me says, Mark, I don't know how you do that. I'd never want to sit in front of my charts, but I enjoy this. So if you're like me and you're do-it-yourselfer, I've given you all the conditions. So you now know essentially how this works. And you could do this yourself as well, but it takes time. These traffic patterns do not happen very often. You've got to really be Johnny on the spot. You've got to really be watching it closely. So when they do happen, you can take full advantage. Number two, the other way you could find these trades is simply let us find them for you. So we actually have created some very powerful scanners, and we've been tracking these trades for years. So you can let our hedge fund research team using our trading tools and scanners find traffic pattern trades for you. Our professional trading desk team monitors 150 plus hand-picked stocks. So we've looked at a number of stocks. We found our favorite stocks to trade options on, and so you don't have to do this. So we've identified the list. And we expect to find maybe about 5 to 10 traffic pattern trades per month sent right to your inbox. Now, we've been doing this now since last November. I'm going to show you exactly what our results are. I'm going to show you live trades here in a second. So this is sent to you real time. When you receive an email from us, there's no guesswork. So we tell you the exact strike price, the exact expiration date, and the exact option to trade. So you're not left guessing at all. You know exactly what to buy, whether it's a call option or a put option. And you know the exact expiration date, you know the exact strike price. So there is no gray area. It's simple enough for my 8th grade daughter to trade this. Best of all, we target traffic pattern trades like this one. This is a textbook one, real trade alert that we published. This is buying Capital One Financial 87.5 calls. You see the three conditions lining up here. We track for that, and all three green lights, we recommended buying the COF 87.5 calls. Those jumped in value by 480%. So $100 grows into 580, or $1,000 turns into 5,800. We also track for bearish traffic patterns. This is a real trade alert we published as well. So this is three red conditions. So we're buying the puts now. We recommended buying the SPY 274 puts. Those are up 488%. So 250 grows to 1470, or 1,000 turns into 5880. But that's not all. Now, if you're planning on following our traffic pattern alerts, we want you to master this traffic pattern strategy. So everybody who signs up for our alert service is going to get a special copy of my special report, Traffic Pattern Exposed. In Traffic Pattern Exposed, I'm going to walk you through this trading strategy, this pattern, soup to nuts. Everything you see here, along with clear examples, will be available for you to follow. So here's what's in the Traffic Pattern Special Report. Number one, I go through all three of the conditions. Continuation momentum, that's condition number one. Condition number two, cycle swing. Condition number three, peaks and troughs triggers. And this is all called combining conditions together, called confluence. Also, I include traffic pattern examples, call examples, and put examples as well. So it's packed with information, all designed to really give you a thorough understanding of what this pattern is. Now, if you're new to trading options, no problem. I've created a library of quick start videos to get you started on basic option trading principles. Here's some of the things that I cover. How to buy a call option, how to buy a put option, how to set up your account. What kind of accounts can you set up with your broker? What is the option chain? Introducing you to the basics there. What are some of the Greeks? Delta, what's gamma? How do you close out your trades? What kind of software do you need? What does in the money mean? What is out of the money, at the money? I go over that too. Underlying charts, how do they relate to options? And also I include an option position sizing calculator. It's going to help you determine for your account size and risk how many options you should potentially consider buying. Last but not least, we're targeting these really big traffic pattern winning trades. So this is what the option position sizing calculator looks like. Simply type in your account size and your the risk per trade that you want, and then type in our alerts. And so you can say, here's GLD, 1750 calls, and this option costs $150. So for your account size and risk tolerance, this will recommend how many options to buy. If you just want it automated, like my wife, she doesn't like to do math, she just wants it done for her. This is perfect for people who just want a quick and dirty way to do it. And then you can look at the risk and say, okay, is that right for me or not? And you can decide to take the trade. Now, for those of you who are interested in following, we've created the Traffic Pattern Ultimate Alert Service. Again, we're tracking 150 of our hand-picked optionable stocks for traffic patterns. We send the alert right to your email. You can set up your smartphone so you get a push notification when this goes out. We include symbol, strike price, expiration date. There is no gray area, guys. We're not ducking anything here. We're telling you exactly what to buy in terms of calls or puts. Entry alerts also, we reference the stock. Where was the stock trading when we published the alert? Where was the option trading? So you have those prices entered. We include a profit target with every trade, and we also introduce a trailing stop once a trade starts going in our direction. So every trade has a profit target. This is all managed by my professional hedge fund research team, one of the few services in the world that has that. And then we also have professional customer support ready to answer your questions. Here's the promo we're doing for today's TradeThirsty Toasted Traders event. Now, normally the 1 year traffic subscription is $19.97. Normally the traffic pattern exposed special report is $9.97. Ordinarily the on-demand videos library is $6.50, and ordinarily the option position size and calculator runs for $100. So all this is normally $37.44. Guys, we've slashed it to $4.95. So you're saving a lot of money here to get in on a 6 month. We've actually extended a 6 month of these alerts. So that ought to get you 5 to 10 of these alerts a month. And this is for the first people who call up. We have limited customer support available, but you're going to want to go to this this link. And Jeanette, I don't know if you guys can put that in there or if you want me to, but you want to go to www.toptradetools.com/go. And then maybe I can put that on here. Here, I'll type that in. Give me a second here. www.toptradetools.com/go. Let me put that in. Now I'm going to tell you about a quick guarantee that we're making with this service. So let me just put the link in here, www.toptradetools.com/go, and put this in the chat box for everybody to get. That's where you want to go. You're not going to find the special anywhere else. Give us a call, 859-963-3445. Here's our guarantee, guys. So I've shown you 14 real trades that each could have paid for the service, not only for 6 months, but for a year. So each one of these trades I was risking $1,000 on. Many have made over 3,000, and this is one trade. Many have made over 2,000, many made over 1,000. So this is a group of very effective traffic pattern trades, and one winning trade could pay for the service very easily, guys, in a matter of months. I'll show you our last trade we logged in was a huge winner in win. It was a put option that we just booked in, and I'll show you our results here in a second on the live trade board. We use hedge fund scanners. They're very powerful tools that are not available to the public to find our traffic pattern trades, so you don't have to. We have one of the few alert services in the world managed by a professional hedge fund research team. It's like having your own personal research team. We do the work. We stare at the charts every day. We look at the scanners, so you don't have to. You can live your life. You can be out and about. We're going to send you the email. Get a push notification on your mobile device. Super easy to put in on mobile brokerage devices as well. Here's the guarantee. If we can't show you 3,000% of winning traffic pattern trades in the next 6 months, then you get an additional 6 months for free. All right, now I'm not worried about that. All right, now this is just winning trades, mind you, right? Losing trades, we're going to have losing trades, and they're going to deduct from this amount. But we're going to show you, we believe, we're confident we can, 3,000% of winning trades. If we can't do that, then you get 6 more months where my team and I have to work for you for free. Now, the trades like this is what we're looking for. This is a real trade alert, DIA 235 call, up 338%. So here's the promo. Let me hit some questions here, and I'll put this up, www.toptradetools.com/go. Mark, what does the trade alert members area look like for people subscribing to this service? Let me show you. Give me a second, I'll throw this up here. This is where you go. So this is the live alerts that are on right now. I think some of these trades still could be workable, but in general, I just recommend you wait for the new alerts. You're gonna get plenty of traffic pattern alerts. How has this service done since inception? So we launched this last November. Let me go ahead and look at our closed trades. You can see it all. We're not hiding anything, guys. This is our closed trades, and you can see here, out of the last 10 trades, if you had taken the last 10 trades, this is using what we call optimal exit because we have a profit target and we also have a trailing stop. So we're using the most profitable of those two so we can be consistent on how to calculate our results. So if you take our track record for the last 10 trades, it's up over 500%. And the 10 trades before that are up over 400%. So total, we're up 3,500% since inception. And this is every one of our trades. Do you have losing trades? Yes, we have losing trades. We're going to have, we have lots of losing trades over time, but we try to get out of them quickly. Now, here's an example. Let's see what that looks like. So this is ABBV. Let's say you risk, this is one that's an all-out loss. We try to avoid that. Usually we're pretty good about doing that. Sometimes we're not. So if you would have bought this trade for 225 bucks, you would have lost all 225 bucks. That's kind of rare. You can see below, some of them are down 50, some of them are down 20, but they're not usually 100% loser. But that's the worst case scenario. So that's a losing trade in ABBV. Check out this win trade. This is the most recent one we booked. If you would have bought these puts for 335 bucks, the trading stop exited with a profit of, or a value of those options at 1,800 bucks. So that's, you would have paid 335 bucks. The winning trade here, this just went off. All the traders who took this made $1,800 in that trade. That was a huge winner, 435%. And that's why we love the traffic trade. Now, not all the winners are big winners. We have GLD, that was up 36%. PayPal was a bearish, that was a put trade, up 100%. Lowe's, a recent trade as well, that was up 68%. And then we have, Ford, that was up 75%. So not all big trades are big winners. You're gonna have some smaller winners as well. And not all the losing trades cannot be worse than 100%. That's the most downside that we can have. So this is, a snapshot of our trades lately. These are the most recent trades. The total performance again since inception using the optimal exit calculation is up 3,524%. All right, let's see here. All right, let's see here. Let's go ahead and take some questions. By the way, this is the resource area. So what does the resource area look like? Just scroll down here. This is all the stuff we include. So you have mobile alerts. You can, I have videos how to read the alert board. So if you say, well, how do I look at the alerts table and understand how to read that? I made a video to walk you through that. This is how to trade options, the video library. Now listen, continue your education. I'm just getting you started here. These are very basic option trading videos, but it gets you started. There's a bunch of videos to do that. You have the traffic pattern exposed PDF special report. This gives you all the details. You have the option position sizing calculator. And then I also created a video for TradeStation and a PDF for Thinkorswim on how to place the order type. They're called conditional or contingent orders. And the way they work is super simple. Every broker out there has them that trades options. What it does is it allows you to trade your option based on the price of the stock. It's called conditional order, super duper simple to place. That's what you want to do in general. You get right in, work your order when you first get in, but if you're getting out of the profit target or if you're getting out of the trailing stop, you want to use a conditional order type. Again, I put the video and the PDF below. It walks you through what you need to know. All right, never mind. Yes, full year now joined you. All right, Sean, awesome. Yeah, excited to have you, my man. Do you have a yearly? Yes. So there's a yearly upgrade there. So you just you took advantage of that. Great to have you, Sean. There. Hey, Sherry, how you doing? Okay, I asked for the schedule of speakers. You gave me a page. Sorry, I think it's a different question. Sean, okay, indicator available. So the indicators, yes, the indicators are pretty much out there, Sean. So I showed you like the momentum. You can use MACD. The MACD is a good indicator. Now, I built our own custom indicator at Top Trade Tools called Fast Trigger Momentum. But MACD can work for this. So there's nothing really magical about our cycle indicator. It's pretty plain vanilla. You can use that as well. But yes, now the trigger indicator, that's our own in-house one, but you can also use like 1 or 2 candlestick bar reversal patterns. So you can get creative with this stuff, pretty easy to do. Can you share this week's results? Are you cherry picking? No, this is it. These are the live trades right here. And I just showed you, here's the close trades. We don't hide anything, guys. These are all of our trades that we broadcasted since inception. Can you have a couple losing trades in a row? Yeah, you can. Can you have a couple winning trades in a row? Yes. But here's the net result, guys, up 3,524%. The traffic pattern is a great pattern, in my opinion, because you're in sync with the cycle motion of the market. That's really, really important as an option buyer. So if you're buying calls and puts, you really want to make sure you're doing that. If you're out of sync with that, you get hammered on option valuation. We're in sync. Our goal is to be in sync. And then remember the genius convicted felon story. Multiple price patterns all firing off at the same time. They give us a more explosive potential, and so that's what we're looking for. Like this last close trade and win. This was a put option traffic pattern trade and win that just fired off. That was one where you would have bought the win put. That was 100 put for $335, and this trade exited out at $1,800. So you talk about a nice weekend there, right? I mean, who wouldn't want that? That's what we're targeting. That's the explosive trades. Now, they don't happen every time. That's a good trade where it's really up a couple 100%. And that's what we're targeting. Not every winner is going to be like that, but we do get a lot of these multi-100% winners, over time. And that's what the traffic pattern is capable of doing. And you're going to have losing trades as well. We keep it real here. You're going to have losing trades, but remember our guarantee. Don't forget also, one last comment I'll make is that we auto roll at the end of 6 months. We're going to auto roll into $97 a month. People have asked, Mark, after 6 months, if I want to stay with the service, how do I do that? So we do that automatically for you. Now you can call anytime and say, look, I'm ready to track these traffic patterns myself. After 6 months, you can say, don't renew my traffic. You can call us anytime, no questions asked. But we have a lot of people actually doing the opposite. We have a lot of people calling up and saying, look, would you be willing to give me the special $497 price for an additional 6 months? And yes, we will. So this is the promo. So if you want to call us up after 6 months, we have a lot of people calling in and saying, look, give me the 6 months for the price of 5 promo at $497. I want another 6 months of traffic pattern alerts. And yep, you can do that. Or if you want $97 a month, you can do that too. So it's really up to you. And then obviously, if you want to start tracking these yourself, then you can do it yourself after 6 months. Just call us up and we'll cancel your subscription. But we have a ton of people calling up saying, look, give me the $495 deal. I want another 6 months, and works out pretty well. Indicators we use are in this. So if you didn't watch if you just showed up late here, watch this recording, and you will. I think you're going to like. Well, I go over in detail. So all the indicators: momentum, cycle, trigger. Let's see here. Okay, this is it. I'm going to be respectful of time, and so Okay, so if you have any questions, Bazir, just give us a call, 859-963-3445, and our customer service team will help you on this. But guys, stay tuned. Jeanette always lines up very interesting speakers, and you've got more coming towards you for Saturday morning. Learn some more creative and innovative trading strategies, and you're going to see them here at Toasted Traders. She just always does that, does a great job of that. She weeds out a lot of the chaff you see out there in the education world. And I always enjoy watching other speakers here as well. So stay tuned. More speakers coming your way. Have a great weekend, guys. Enjoy the beautiful weather outside, and we will see you in the next webinar.